Hello guys, welcome to the Trading Parrot. In today's update, I want to cover the price of Bitcoin reaching almost $108,000, which is getting very close to the first monthly resistance for December. At that point in resistance, we're going to cover the 4-hour to give you the key levels that we need to defend for continuation to the upside. Pretty good news on the daily as well. I'll cover new developments from the Wells, the MACD daily confirming a very bullish signal as well. We're going to compare that with 2020. Very similar. Indeed, we'll cover the weekly time frame, which is getting us very close to a new milestone that you don't want to miss. And of course, liquidity and this group of 3 alphas telling us to be a little bit more cautious and these prices potentially initiating some sideways for a couple of days before we can hit new higher prices. At the end of the video, I'm also gonna cover the monthly, showing us how close we are getting to a strong resistance in that time frame. Whatever you do, don't miss that part of the video if you're thinking on hodling Bitcoin for very long term. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And yes guys, the video is gonna be packed with information. Tomorrow there's the FOMC meeting. Of course, everybody at the moment, whenever they take a trade, pretty much are thinking about what's gonna be the outcome of that. And that for me is just for awareness. I do not trade economical events. All I do is take a note and think there can be some additional volatility, which is great in whichever direction it comes. Today we're gonna make a stop on the open interest. We haven't covered this in quite a long time, and we need to take notes on this alpha because it has played out perfectly in the past 2 months. So I'm adjusting now my expectations and see if next time is also going to play out once again. On the top of the chart, you can see the price action. In the middle of the chart, you have the aggregated open interest coming from all exchanges. You can find this data for free on coinalyze.net if you go to the Bitcoin open interest section. Let's focus first on the open interest. I'm gonna magnify this and I'm gonna show you what we did during the megaphone pattern so you can understand why I'm doing this once again. Completely naive and thinking maybe, just maybe, it might do the same effect and give us the precise moment where we need to take profits if there is another impulsive move. On this move from 10 billion to 20 billion, we place this Fibonacci extension from bottom to top to bottom once again, and we projected the 1618, giving us 32.2 billion. That is something that, to be fair, we didn't do during the megaphone pattern, we did it during the breakout. When we were approaching roughly 27 billion, which was my finger in the air kind of forecast for the next bull flag or sideways to happen. As soon as we broke above that level, I ended up thinking, wait a second, how far are we really going to get? Because in these areas like this, when we were finding a new area, it was immediately on the next ladder. But in this case was such a big extensive move that I pull up one of my best tools or preferred tools, in this case the Fibonacci trend extension, and the golden pocket gave us 32 billion. On the day we were at 27 billion, trying to speculate where this beast was going to stop. Fast forward a few days after, we reached 32 billion.2, and we put magnifier glass at that point saying, is the price going to stop there? And for roughly 23 days, we've been respecting that, forming a new flag. As we know, this week we broke out from that flag, and the obvious question comes to mind. If we did it in this extension in here, and we managed to get to 32 billion, if I take this new extension all the way to 32 billion, starting from 17, which is the leg that exit finally the megaphone pattern, breaking out and non-stop until 32, how far can we get on the open interest? And I'm already laughing because the number is just ridiculous. It's ridiculous. 52.35 billion. So the question now is, fine, that is a nonsense number, just like it was to think about 32 billion when we were at 14. That is more than double the moment when price of Bitcoin was at 49k. This 32 billion was reached when we hit right below 100k. So how high can we get on this extension? And for that, I'm gonna do a lot of cheating and speculation. Is nothing clear, non-financial advice. This is trying to catch the next alpha, but in an exploratory way, not as a forecast on stone. So now I'm bringing the price and doing the same exercise, pushing this to the top of that, and notice that the price here is breaking out, not forming a perfect flag. That's why I'm saying there's a lot of cheating. Using this low for the extension, you can see that it allows me to project the price to 154k. So if this leg, thanks to this bull flag, repeats the same performance, that will be 130k. But if it does a golden pocket like it did with the open interest in the past leg, then it's 154k. At that point, the open interest is gonna be 52. Remember, we were at 20 billion and all influencers were saying it won't go beyond that, and indeed it did 50% more, from 20 to 32, and from 32 to 52 it will be pretty much another golden pocket extension. So that is very bullish, but let's move on. That is giving us too much hopium for just a Tuesday. Tomorrow is the FOMC, and I'm sure there's gonna be some volatility to the upside, downside, in every direction. We'll see. Update very quick on the fractal, because even though it succeeds, I'm pretty annoyed of every day looking at this, and I'm sure you are as well. We did 4 candles creeping up in here. We did 4 candles creeping up in here. The fourth was the impulsive one, same in here. And then after that, we are kind of slowing down against the first resistance. In here, we didn't slow down at all. On the second day, we broke above it and we went straight for the second resistance. So if we were doing the same, by now we should be at 120, but we are not. We're being held by the same. We're being held by the first resistance of the CPR monthly of December. Why is that? And I'm gonna show you 3 to 4 sources of data that are currently containing the price, and I think it will be wiser to be aware of them rather than just ignoring them and thinking, sure, we're just gonna repeat 2020 because the fractal should continue. That is not how we trade, and the first source of concern that we could potentially face with the volatility tomorrow, and it's good that we are prepared, is if we lose this yellow trend line on the 4 hour. We had it like this, it faked out to the downside, we have to adjust it to account for that, and then we have another fake out to the downside, so we need to readjust it like this. So at the moment, that support is at 69.68 on the confluence of both the global resistance that became support and the support from the yellow trend line ascending. So we need to adjust now the RSI reverse and use 69 as support. I'm gonna leave the level of 37 as the last line in the sand in case there were some more intense shake-off tomorrow, to have a point of contact in here to see if we can repeat the success of bouncing off 36, which we did on the 10th of December perfectly. So if there was a breakdown from that point of confluence and we started putting a channel to the downside, I'm thinking to pay attention to that 37 that could become later on 38 depending on the speed that you fall. And this is all hypothetical, we haven't broken down below that, but if that happened at the point I'm not covering it on YouTube, I want you to just be aware of how I will process that information if indeed happened. Notice as well all the fake outs that we already had. So if this closes right there, wait for confirmation that there is a breakdown with a retest of these levels of resistance. On the first candle, we have had 2 fake outs to the downside, so keep an eye on that so it doesn't trick you. Looking at the price, support is very, very close to the price at the moment, and that is because we recently broke out from the global resistance and we still haven't done any move beyond what the statistics were saying, which is to slow down at 74. If indeed tomorrow we put a candle like this and we break beyond those statistics for the past 150 candles, that will be super cool. But at the moment we are accumulating divergences on market cipher, on the 4-hour daily as well, and we are confronting that CPR with not the same strength that we did in 2020. That doesn't mean we're gonna fail, but keep an eye on that, because when the chart is saying, well, in here we have a slight difference, we pay attention. It doesn't mean I'm gonna close my longs, it doesn't mean I'm gonna unload my Bitcoin from my hardware wallet or anything, but if I'm in a swing trade starting from very close to the price, the closer I am from my entry, the more attention I pay. On the daily, as I said, we got good news contrarian to what the 4-hour is saying. The 4-hour is a little bit testing support and in a state of keep an eye for those sources of data that are saying that there's some strength in the selling pressure right now, which we are gonna cover in just a few minutes. On the daily, we're seeing the opposite. We managed to do what we wanted yesterday, which is to close a candle above the highs since late November on the RSI, and that means that the momentum on the daily has grown. We are defending very well this level of support that yesterday it seemed that we were going to break down. We were paying attention, and indeed we succeed with that test. RSI seems to be on the way to this potential top of the range at 78. I'm leaving outside 86 because I think already we hit it. We are in a channel down, repeating similar performance as 1, 2, and 3, building that channel down. That is my thesis. That doesn't mean price going down, it's just the channel of the RSI coming down. So let's say we hit 79 on the RSI. We need to adjust that expectation because now it has increased slightly. That could take us to 115k. Getting to that unrealistic 86 is at 130 today. Low likely, in my opinion, in this particular move, maybe later after a swing low. The Y support at the moment should be somewhere between 61 and 62. So that's gonna put a bit more stress on the price because, as you can see, now the line is gonna come closer to the price at 103.2. That means that breaking below that 103.2, a moving target, causes a breakdown from the support daily from August. That is global support. It is very important that we don't do that. Intra-candle below 103k, sure, that's absolutely fine. Candle close below the 61, then that is gonna be a little bit more worrying. If we get there, I have to cover that pretty much with a live stream as a matter of urgency. And the CME gap is there laughing at everybody because it came straight to it and it didn't feel it. That is just so ridiculous, and I'm sure that market maker is leaving it for later. One day we're gonna feel it sooner or later. That's just my opinion. Notice now the bull market support band has done great progress, exiting as well from the megaphone pattern, right now sitting at 80k, almost getting to 81. Remember that that indicator takes that name for a reason, but at the same time, notice that in 2021, which will be equivalent in here to being in May 2025, we only touch it that time just to break down 50% from top to bottom. So hopefully we repeat that, but we are gonna cover the monthly, which is disagreeing with this thesis of only waiting until May to come and test the bull market support band. That's coming later in the video. Good news from the Big Well Explorer. You can see that the breakdown has continued coming down. Right now it's at 0.61. Finally, we are getting this accumulation that happened in early December last year, but now it's happening in late December. Notice that this candle might not be settled, so maybe tomorrow it's gonna push up from 61, but the way it's looking is pretty cool, and I think it's because there has been some outflows of 11k versus deposits for only 3.95 from large holders. ETFs continue to accumulate. We are at Extreme Grid with 87. We have confirmed settle the bull cross on the MACD daily, and that is amazing news, guys. The histogram was kind of anticipating this, going into pink and then crossing the zero line at the same time. You can see that the values of the histogram, of the MACD at the candle close yesterday was 37.10 versus 36.77. We can zoom in so you believe me. Right there, the blue is above the orange, and we continue today in that trajectory. Looking at the performance of 2020, you can see that that bull cross after this retracement again of the MACD play out on 15th of December. That is the day that it got confirmed. And after that, there was this magnificent move from 700 to 4,600 on the MACD value. At that point, we reached 41k, which is double the all-time high that caused this breakout. So 100%. Then it cooled down again into February, and in March we have another one with another bull cross. Notice that this time we are not doing it from 700, we are already at 3,700. So that is another thing to consider, because in order to do something as significant as what we did in here in 2020, to get from 700 to 5,000, it will be just with a finger in the air, like seeing the MACD doing something like this, getting to 13,000. And I think for some reason that is a little bit unrealistic. You can say whatever you want in the comments. That is my opinion. Take it or leave it. RSI weekly, we need to cover it because it's about to reach 80. Weekly RSI. And if you've been watching my channel, you know that every time we cross above 83 on any cycle on Bitcoin, we start calling for a top. And that is one of the things that we used to sell at 73.5k and then go sideways for 8 months. We also use it at these tops in 2020. And something tells me that this time, one, we won't make it to 83, but if we made it to 83 and beyond, that's gonna be really unprecedented. Getting to 83, which currently is actually 84, let's change it to that, on the weekly, is a price of 120k, okay? So you're gonna say, so you're fully against the idea of reaching 150. Once again, let's study RSI, watch my tutorials. RSI doesn't work like that. We can get even to 84, stop the RSI growth at 120k, then the RSI starts coming down and price can carry on going up, producing what are called bearish divergences. So we are here just forecasting that I don't think the RSI is gonna get beyond 83. I think it's gonna cool down around this area and break down this trend line in February, if not earlier. Let's go to liquidation levels very quickly. Not much to say in here. Largest liquidity on the short term is above the price. Below there are some interesting levels starting from 103k. Longer term, we took out all the red and I'm just gonna do this exercise eliminating from the screen the red so we can see what comes after that red. And we haven't taken 108k. That is the resistance of the CPR level. After that, we start with liquidity significant from 114 to 118. Notice that gets very close to the 120. After that, we see a drop on liquidity at 120, less motivation to carry on unless market maker really can afford to push the price to 127k. Now let's look at all these indicators that are saying cool off short term, and this might be just the setup that people are taking against the FOMC. You can see that the longs have reduced significantly in here, and this alpha is very simple. It doesn't play out every time. You can see in this area in red, we kind of chop and started doing some drawdown. In this area, we also have a drawdown. I already covered this 8%. This area is the only exception where the price carries on to the upside. Here at this top, again, we get some chopping of 9%. And here we are, again, very little number of longs in global accounts on Binance. So that is once against 3 failing, so pretty much 75% accuracy, or maybe we can increase it a little bit more if we take into account this drawdown that put 9 to 10%, but that is in September. So keeping an eye on that alpha. No alpha by itself is to be actioned unless you have other things in confluence and a full narrative of your own. Do your own research. Looking at bid versus ask, we get another alpha saying that there is some potential bearishness in here. The areas in red are areas where the ratio between bid and ask is favoring the ask. Loads of limit orders wanting to sell above the price. You can see this big accumulation in here, this one in there, and this one in here. All of them cause some drawdown, choppiness, rolling over of the price. And the opposite with the blue, we tend to see moves up of the price following with that interest additional from the bidding liquidity. In this case, we were seeing this trend coming down, meaning that there was less and less and less selling that caused the breakout to almost 108k. But right at 108k, in confluence with that CPR resistance monthly, the shorts came back, putting loads of selling orders above the price, much more significant to what they were doing at 101 the last time we touched the trend line, breaking down from the trend line, causing a new wave of increased selling. You can see that the thresholds are putting 2 skinny lines there. It's nothing like we were seeing in there, but keeping an eye that those become just a one only case and not a huge cloud of selling, because that has shown in the past that can really contain the price. Then we got the alpha of the delta. 500k is additionally putting the longs at risk in here. That is not sufficient to dump the price. On every pump we see that delta, but it tells us that there is additional risk today for the longs and probably tomorrow, unless unless we get a pullback and we clear out that before the FOMC meeting. Order block 110, selling wall, you can see it on the weekly time frame, 70 million right there at 110. That is containing the price. 115 is very small with 24 million and 41 million at 120k. Selling walls haven't done that much to the price, but it tells us where they want to scare people. And I say that because I haven't seen any wall executing really myself, so they act just as a psychological thing, and it's pretty much where all shorts place their order. I wonder if they do it to get additional confidence, to additional shorts to enter the market, just so they can liquidate them later or shortly after. Historically, being at the tops of a channel in terms of longs versus shorts, this is just the delta, is a different type of ratio, has been an area where we start thinking on taking profits or slowing down in taking longs. Sometimes the price can creep up slightly higher, putting bearish divergences, but then it still comes back down and resets into the red, where we start looking for longs. So this is not an alpha definitive like top sell and bottom buy, but additionally with other breakouts from the 4 hour, we have used it successfully to enter on most of these bubbles in here if you watch my previous videos. In this area in here, we are at the top of the channel, so this is just saying careful what you do there. To enter along right there might not be the best idea, and the risk reward is probably on the lower end. Levels of liquidation 105, 99 and 93.5. From the past 30 days, nothing as substantial on the top, and that is another thing that is not as great, because apart from the 108, there is not really a lot to take to the upside from the last 30 days. Hold on your horses, because we need to look this with longer term, because longer term calls out from here. You can see this area in red that CoinGlass is not capturing because it doesn't offer more than 30 days. Fair value gaps, we got the 105 and 7, 103.3, and then the one that I speculate we were not gonna take, which is from 99.2 to 97.7. And just to close the video, remember that now we are at 83 on the CBBI index, and this is an index that goes from 0 to 100, and we are reaching pretty overextended levels to start thinking about taking profits. You can see in every cycle it reaches the 99. You can follow it on Twitter or just search for CBBI index on Google. You're gonna find this website. It's pretty cool that you can enable each of the indicators that are part of the index to see the forecast updating, and we are entering now this area where we are in the dark orange. Once we get into the dark red, you really have to be very careful. And as I promised, I was gonna cover the Bitcoin RSI monthly, because today we are at 74. Okay, we know that the top is somewhere around 79. That is the top of RSI. Once again, not necessarily top of the price. So we got 5 additional points to get to the top of the RSI. This is just speculative based on that resistance that you can see in there. From the point of view of the timing, from 400 days above 70 to 300 days, then to around 200, and now to 100, doing the linear regression that gives us roughly 92 days. So in between this area to February, we got 90 days of seeing the RSI on top. And the last thing that you want to do is to wait for that RSI to come back below 70, because at that point you get probably the worst drawdown of all the cycle in one hit. And last cycle we have another leg which was really forgiving, allowing you to exit at a higher high. But in 2017 there was a blow off top, so you get right after that 81% down, and waiting for that close below 70 will mean that you are exiting already at 62% down from the top of the cycle. And if we do just some speculation, January, February, at that point there should be some sort of peak for the RSI. Let's speculate that it happens something like this, and then it comes down. What comes after is as important as the peak, because if the RSI ends up doing something like this and then a push up there, that is a dead cat bounce, and a dead cat bounce bounce in October 2020 was all that we needed to put a new all-time high. Another alternative is just to do it lower like we did in 2017, and then you don't get that dead cat bounce to exit. Another alternative is that we hit the top, we are spot on the RSI and the timing, but then this comes down and hits the trend line once again, mimicking something like in 2013, where after the first peak, we still carry on going from $100 to $1,400, which is just crazy. So I know that many people are talking about RSI out there on the monthly, speculating this is the top. I want you to make sure that you're being open-minded on the different outcomes, study RSI, go to my channel, the Trading Parrot, hit playlists, and here there is a tutorial called Trading Tutorials. Open the full playlist and you're gonna find each and every single free tutorial, including the 3 episodes of RSI. Guys, if you want to trade Bitcoin, Ethereum, altcoins, the longest array of altcoins on spot and future perpetuals, having access to leverage, then consider opening an account on Bybit. If you use the link in the description to do so, you can unlock up to 30,000 in rewards and get the lowest fees to trade. I got a new campaign on Bluffing offering 10% cashback for new accounts open with the link in the description. This is one of my 2 non-KYC exchanges, which means that you can open as many accounts as you want with different emails, no need for VPN, and using the link in the description guarantees you as well the lowest fees to trade. Before you deposit on this exchange, give it a try where you live, confirm that you won't need VPN. There's probably 1% places in the world where still people need VPN on this exchange. If that's the case, the good news is I have an alternative exchange called 2bit that is also non-KYC. If things don't go well in that sense with Bluffing, give a try to 2bit. It's offering 9k bonus, 40% discount. It's a copycat of Bybit, so if you know Bybit, it's gonna look very familiar to you, built by the same people as a non-KYC option. I'll see you on the next one. Bye bye.